Well, that's another Matrix attack. Try to go live on X. Doesn't work. Close the stream. Go live again. Cancels out the stream on YouTube. Matrix attack. It is what it is. The Matrix has fucking attacked us. But we'll continue to press forward. Continue to fight back because we will not be put down. Look at this. Boom. Fucking unbelievable. X, we get 80, we get what? No, 70 live viewers on X last time we go live on Thursday. This time we try to go live on X with the Ultimate Market Professionals, and then the stream crashes. Oh, X doesn't work. X wasn't able to update its settings. Isn't that interesting? As soon as we have a massive stream, we start to break into the algorithm. The people are seeing the juice. They're understanding that we got the alpha, 80 or 70 viewers off of X live, consistent. I go live this time, Ultimate Market Professionals. X stream doesn't work. Interesting. Just as soon as we started getting momentum, huh? Very interesting. It's all right though. We'll fucking upload it post, right? Yeah, free speech my ass. We're giving too much fucking alpha. X decided, you know what? These guys broke the live stream last time. 80 viewers across all platforms. Let's just throttle them for a second. They're getting too big, too fast. We don't need. We gotta slow them down. It's all right. It's all right. It's all right. We'll still go live. We're going to drop the fucking juice. We're going to get it cracking on YouTube. And you know what we're going to do? We're going to upload it afterwards to X. We'll put it on X afterwards. That's fine. Right? Unbelievable. Isn't that crazy? 70 live viewers last stream. This time, boom, they fucking crash it. They crash the stream. It's all right, though. Let's get right into it, gentlemen. I hopped on early because I was itching to fucking go into the charts. I was sitting around. I'm looking at things. I'm trying to put together the game plan for the next couple of moves, and everything we've been saying has been playing out. What did we say? 1750, 1700 for ETH. Things are going to start to come back home. We're going to get that final capitulation before we start to reverse and go back up. That's what's happening. So, hey, when you got to readjust your bias, when you got to readjust your bullishness compared to bearishness, it's a good thing. Okay, it's okay to readjust your bias. We turn bearish. We think we're coming back down to 1750, 1700. Guess what we're going to do? We're going to max fucking bid. And we're going to get generational entries on all of our plays. And we're going to ride that bitch back up to all-time highs. Okay? But yeah, I was itching to get back onto the stream. So let's just jump right into the charts. I'm going to get it cracking here. And we're going to start from the most zoomed out perspective. And we're going to work our way down the risk curve. So today we're going to start with the SPX. We're going to start with equity markets. Because I want you guys to see what it is that we're seeing with SPX. So let's do extra scenes. Do a little screen capture. A little Mr. Producer. Let's fucking work. Come on, Paxter. Let's fucking work. Let's see if all the people on X, the 70 live viewers we had on X, find their way to the YouTube channel. I do have the YouTube linked in the bio. All right, come on. Fucking open that shit up. Can you see it? Hold on. Hold on. I'm trying to do a little Mr. Producer. All right, let's do it like that. Does that work? Hang on a second. Always working, Paxer. That's how we fucking do it. So I'm doing the screen capture. You guys got to pick up the fucking... Time to make some money, baby. Come on, cancel. Look at this. So it's not capturing my trading view. I'm not sure why I would do that. But if I go like this... All right, we're going to do it like this. Transition. Boom. Okay. All right, gentlemen, let's start zoomed out. So what's going on right now in equities? Because equities is really what's driving the rest of the market. Everything's basically beta to equity markets and the liquidity that are flowing into these markets. So let's pull up SPX. Okay, let's take a look at this, the S&P here, huh? So what do we get on the S&P? This is what everybody's, not everybody, but people are starting to look at. SPX, right? So when you go in log mode on the S&P, right? We had this trend line that we were working from this bear market low in October of 22. And if you want to be super zoomed in on it, some other people were drawing it like this, okay? So on SPX, what's going on right now in the markets? So people are starting to get a little bit nervous with the stock market. What's going on with this price action? Is it over? Are we done? Are we cooked? And we take a look on log mode. Clearly there's this significant level right here at 6,000, okay? So the S&P kept rejecting on a lower time frame at this level. It kept trying to break out, and we couldn't really push all the way through. So we go on a lower time frame like the daily. You can see right here that this was a sticky level, right? And then we had this, demand zone kind of right here, okay? So we came up, we were pressing, we set a new all-time high. Reject, come back down to demand. We kind of pop back up, come back down to demand, come back down to demand. We went for another breakout rejection, went for the breakout rejection, went for the breakout, had this false breakout, kind of came up over the $6,000 level, and we broke back down. And here's what is causing now this further puke down past this demand zone. So I'll show you guys how to look at this, right? So let's turn this to demand, okay? So what we ended up doing is we actually lost this multi-year. So from back in October of 2023, from this local low right here, we lost this trend line. Okay, so this is what has people nervous right now. So right here, you can see every single time we tap this trend line, we pop back up and we made another move higher. So down on the daily, we came back into our demand zone. Okay, we hit this trend line again. We came back up and we started trying to break out again. Came back to the trend line, broke down, rejected, came back to the demand, popped back up, broke down, and now we're starting to break down here. So what's going to happen is there's a couple levels that we can be looking for on the S&P. Okay, so this would be my next target, would be this demand zone right here. And because you're seeing this S&P drawdown and have this local correction, that's what's getting the rest of these markets to de-risk, okay? Because right now we're just floating in no man's land on the S&P. This thing has got at least down here to come down to. I mean, you could use this as like a little springboard, but I don't expect that to happen. I'm expecting something more like this. Okay. So we draw down on the S&P. And if we draw down on the S&P, obviously what's that going to do to the rest of the markets? Well, it's going to draw them down. So this is what we were expecting to happen. This is actually confluent with what we've been trying to see. So that's on the logarithmic mode. What's happening in the S&P? Okay, so we're drawing down here. We're looking for this demand zone, like right around 5,500, 5,600. Come back down into here. Okay, now that's a healthy local correction, similar to something like this, right? Now we're not gonna look for it to be as large as this correction. Well, let's see what's the size. But this was another mid-cycle correction that we had on the S&P before we inevitably went higher. So we went down, what, 11%, little mid-cycle correction, right? A little bull market correction. So hit the low here, go into a bull market, do a little local correction, down 11% before inevitably straight up. Okay, we had this other little correction right here. About, what, about 5.5%. We get this correction right here. There it is, another 10%. So we had a 11%, 10% correction before inevitably moving higher. So where we're at on this? 8%. So if we come back down to this demand zone right here, look at that, right? So that's about the same percentage correction as we had right here and right here. So that's why this demand zone makes sense to me, is because if we are getting that mid-cycle correction again before inevitably moving higher, this is where I'm looking at for to start to bounce. So like right around that 10% mark is what we're seeing. Okay, that makes sense. So we're fine, right? It's not something that you want to look at and say, all right, this thing's completely cooked. We're going into a multi-year bear market. No, it's just a mid-cycle correction. You get those in bull runs. Because if you look on a higher enough time frame, let's do it like the 2-day, 3-day, right? Clearly, you have a structured uptrend. Right? What's an uptrend? Higher highs, higher lows, right? Here's the low, higher low, higher high, higher high, higher low, higher high, higher low, higher high, higher low. Boom, we're fine, okay? So we're getting close to the end of this correction is basically the point that I'm making. So that downside that everybody's been afraid of, I mean, the good news is the majority of it is done because we only have a couple more percentage points to go down on the S&P if we do get the full correction. Now, we might front run it a little bit and start to kind of curl back up over the next couple of weeks, but that's what I'm seeing on S&P, right? Because that's a driver of the rest of the markets, right? Whatever's going on with the S&P is pretty much what's happening with the rest of the markets, okay? So look for this level. I'm looking for like 55, 60, 5,600 on S&P before we start to bounce and come back up, okay? Cool. Now, why would it make sense that we should continue with this bull run? Well, if you look at the other indicators for risk on assets, everything else is indicating a continuation in the bull run. The macroeconomics, the macro indicators, everything that you would look at from a higher time frame that tell you, okay, are we getting bearish or are we getting bullish for these markets? Everything is pointing to bullish, okay? So yeah, we're experiencing a local correction, but this is not a multi-year bear market where we did this, right? This is a bear market, right? Right? This is when you actually go into a structured downtrend, multi-year downtrend, right? And then finally, you set your low, you pop back up, you break out of the channel, you come back down and retest. This is your confirmation that we're in a bull run now. So you retest the top of this channel. Okay, now we're going up, okay? We're not getting that structured downtrend, right? This is all still an uptrend. So if you look at it like this, this thing's fucking steep. Like you're clearly still in a bull market. Clearly. Okay. So, yeah, you look fine, okay? Until you break down out of this channel, which look, it makes sense, right? Because I put this demand level right here. You probably come back down in here. And then as you get closer to the bottom of this channel, if you do, you're going to start to curl back up and make that next move up, just like we did down here, right? Beautiful. So this shit is going up only, all right? We didn't break out of the multi-year trend, right? That's COVID right here, but obviously that broke the trend. Obviously this broke the trend. Like you stopped making higher highs and higher lows. You came down, you start breaking down. This is not a breakdown, okay? We haven't lost market structure yet. So why am I saying we're going to get a continuation? Well, let's take a look at DXY. Okay, we talked about this, I'm pretty sure, on last stream. So we had this drawn out from over here when we were retesting this demand level, right? This demand. I said, if we break down here, this is bullish. Look what happens. We popped down, we came back into the demand. We did not hold, and then we started, as soon as we lost this demand level, we started nuking. Beautiful. So if the DXY is nuking, well, that means the value of the dollar is going down. Therefore, the value of our assets are going up against the dollar. Bullish. People are going to put their money into risk assets. Why do they put their money into risk assets? Well, if you're holding the US dollar and it's losing value, wouldn't you want to hold something that's going to appreciate against the dollar? Yeah, of course. So this is what gets people to start moving back into the markets once things start to turn around. So this is setting up for an incredibly bullish year as well, because September of 2024, Bitcoin, if you look at what was happening with Bitcoin, this is why it's, so important to be patient in these markets and understand the conditions in which you're operating in. Bitcoin and crypto was pumping its face off Q3, Q4 last year as the DXY was pumping. You understand that? Look at this. So DXY is pumping from right here. This is the local low. Okay. Meaning that risk assets are devaluing against the US dollar because of the US dollar is denominated, or if these assets are denominated in the US dollar is going up in value, therefore the fraction is worth less. This is pumping hard. DXY is pumping hard, and look what's happening to Bitcoin. And look what happened to all of our altcoins, right? Like Pepe, Andy, Wolf, all the other shit that was outperforming. Pumped while the DXY was pumping. That's a headwind. That's pushing against us. That's bringing our prices down compared to the US dollar. So we experienced this massive appreciation in altcoins and in Bitcoin, this next leg up, while the DXY is pumping. That's bearish. The DXY pumping is bearish. And so when I'm looking at these macro indicators and I'm saying, okay, is the cycle actually over? Or we're just getting a correction. I'm saying, no, we're just getting a correction mid-cycle, and we're actually about to move into even more favorable bullish conditions than where we were at the rest of the cycle that we've already experienced. Like the gains that we saw on Andy and Wolf, the gains that we saw on Bitcoin this last couple of years, those are going to be small compared to the next leg up that we get on equities, on Bitcoin, on altcoins. Because this nuking, when we actually get the turnaround on equities, we get the turnaround on Bitcoin and altcoins, these are going to pump that much harder because the Dixie is nuking. So not only are we appreciating against the US dollar, but now there's going to be more liquidity injected into the markets because people are going to try to get out of their US dollars, get out of their bonds, and rotate them into risk assets, right? So you have to look at the bigger picture on a large enough time frame and understand where are we actually going long term. Because if we were entering an actual bear market, then yeah, you want to exit markets, you want to de-risk, you want to start to short, you want to get out of markets. But if you're just having a local cycle correction, right, a cycle correction, you don't want to be exiting markets now when things are low, when things are already down 10, 15, 20, 30%, altcoins 80%. You don't want to rotate out now, and then we start to reverse the trend. We start pumping again, and then you're buying back in higher, FOMOing in at the top, and you just completely destroyed your capital, and you got a worse entry on your assets, right? So that's not the way I'm looking at it. I'm not looking at this as saying, oh, I need to get out of markets. I'm looking at this saying, oh, fantastic, accumulation. When do we start accumulating? When do I start buying more? Because we're going to ride this next leg up higher. So DXY, like I was saying, is nuking now. Bitcoin was still able to appreciate in this unfavorable environment these couple of months. Well, when this shit starts to curl back up, it's going to pump that much harder if this continues to nuke, which look at this. I mean, this looks like it's fucking dying, right? So we might get a little bounce, strongest bounce would probably be up here, retest this demand zone, which is going to turn into supply. So bearish underside retest, it's going to turn into supply now, okay? And then likely that's where you get the rest of this nuke to happen, okay? So I like that. On top of that, what are we seeing? So let's get that out of there. Let's get, when I have bonds right here. Let's look at bonds, okay? So bonds is pretty much where the DXY was. So look on the DXY. So we came into this demand zone. We pop back up, right? Because you get a relief bounce off of the demand, okay? So we pop back up. Oops. So you come back into our demand, right? All right. Come back into our demand, pop up, create this high, come back into demand, we get this little bounce. Now, what I'm looking for on the 10-year is this move. A follow through nuke, maybe pop back up, retest, bearish underside retest, do this. Fantastic. That still look like it's going to play out. So if we get the 10-year bond yields to start to nuke, people are going to rotate out of their US government bonds. Why? Because the yield they're earning on their bonds is not going to be worthwhile enough to make sense. Because if the US dollar is continuing to inflate, like this is how you got to look at this. This is how people with billions of dollars think, okay? What are US bonds? People buy US bonds so that they can take their surplus US dollars and put them into something that's going to generate them a yield. Because why? Well, the US dollar is an inflationary asset. So if you hold it over time, your buying power goes down. It gets devalued because the DXY. Okay. So, all right, go. Fucking subscriber. Fantastic. Fuck X. All right. We'll get subscribers off a kick. So, like, you got to understand what you're actually doing here with investments and assets. Like, understand what you're actually doing. People don't understand how this shit works, okay? So if you have your US dollars, so let's say China, okay? China sells the US a bunch of products, okay? The US pays China in US dollars. China now has all this surplus of US dollars. What do they do with it? It's a depreciating asset. So they don't just want to hold US dollars in their bank account, these trillions of dollars they get from the US. What do they do with it? They could do a couple of things. They could either invest it or put it into bonds. So if the bond yield that the US is offering is high, what China's going to do is they're going to put their money, their surplus US dollars, into these bonds so that the yield will counteract the inflation. And so the yield is paying them in US dollars, right? So they put their money into these bonds and then they get paid interest on these bonds, which they're going to get paid in US dollars. So think of it like this. Well, if they have bonds that are paying them in US dollars and the US dollar is continuing to depreciate, that means their yield is also depreciating because they might be getting 4% on their bond, or what is it right now? 4.2% on their bond. But if they're getting 4.2% paid in US dollars and the DXY is nuking, that means the yield is also depreciating. Okay, does that make sense? So it's a double whammy. It's a double fucking smack. It's a double incentive not to hold these bonds is if the DXY is nuking and the value of their yield is going down, while on top of that, the yield itself, the percentage of the yield is also going down, then they're double incentivized, or investors are double incentivized not to hold these bonds because the currency in which they're getting paid their yield in is deflating and the interest that they're earning is also going down. At least if the yield that's 4.2% right now was going, let's say, down, it's going down to 4%. If the DXY was moving up, then it would counteract each other. Because even though the yield is going down, if the value of the asset is going up, the value of the dollar is going up, then it counteracts each other. Then they're still getting the same buying power, the same amount of money back, if that makes sense. So the point I'm trying to make is you got to see things from a macro perspective. Do you actually understand the mechanics of these markets? So DXY is nuking right now, and the bond yield is going down. Double incentivized not to hold this. Why would I hold it? Not only is the asset I'm getting paid and devaluing, but the interest that I'm earning on my bonds is also going down. Okay, what am I going to do with all these surplus dollars now? What am I going to do with all this extra money now? I'm going to sell these bonds. I'm going to get out of these bonds, and I'm going to start to inject that liquidity into things like gold, into things like equity markets, into things like Bitcoin, crypto. Oh, now you see how these things start to work their way down the risk curve. So I'm trying to have you understand why on a larger time frame I'm not worried, because I understand that this right now is just an opportunity to continue to accumulate my winners, my risk assets at heavily discounted prices. So when we ride that move back up to the upside and eventually go into new all-time highs, I'm fucking printing off of my bags. That's how you make money. You front run the eventual and inevitable move in the market, right? So just because price is going down now doesn't mean like, oh my God, I got to sell everything. I'm down 80%. I'm down 60%. I got to get out of everything. Oh, no. What you got to look at it is I'm going to front run now because you already missed the downside move. If you didn't get out at the top, you already missed it. Like you're not understanding how to play the game. You already missed the move. You have to front run the move. So now that we're getting close to the low, you got to front run the move to the upside. That's how you generate the money. That's how you generate the wealth. So I'm looking at this. I'm saying, all right, if this 10-year bond yield comes back down below this demand zone, your next significant level is, I mean, you could draw it two different ways. You could say either we're going to come back down to this level right here, We can even tighten this up and say like right here. Or maybe we just nuke all the way down here. Okay. If we get down in there, baby, we're fucking cooking. Right? So this is your demand right here. So we got to get this to nuke. Boom. People are going to start flooding their money into risk assets. Beautiful. All right. So there's your macro, okay, where we're heading on a higher time frame. Now, again, like I said, I'm still seeing more downside on the I'm still seeing more downside on the S&P. So again, locally, expect things to still draw down further, but we're just going to be looking for the bottom, okay? So we're trying to look for the bottom on these assets and reaccumulation so we can enter in with size, okay? All right, any questions? We got double-digit live viewers even without X. That's why we don't need you, X. We don't need you, X. Okay. So there's higher time frame. Let me think of anything else I want to show you guys on the higher time frame. Let me see. I gave you the level on S&P. Dixie we looked at. We can look at the VIX real quick. We haven't talked about the VIX a lot. So the VIX is the volatility index for the S&P. Okay. So let's do this. Draw this out for you guys. What time frame we want to look at this on? I mean, that doesn't really make sense. No. Let's go on a lower time frame. Yeah. Okay. So here's the VIX. Here's the volatility. So as this continues to go up and the volatility spikes, you want to basically assume downside. Okay, volatility. So as this continues to move up higher, if we break out of this trend line or we break out of this high, then you're gonna have some more downside, which is what we're looking for. So you can see how every time we pump into these things is whenever you see that downside, right, happen in these markets. And so we finally broke out and we've been trending up. So since we've been trending up on the VIX, this is why I'm looking for this last puke on equities, because that would signify a puke is coming, okay? And once this gets blown out, this volatility index, once this gets blown out and it starts to get crushed again and do this, so let's say it pops up here, we get that final shakeout, and it starts to do this again, comes straight back down, just like we got here. We got here, 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 this one right here, boom, right? As these things nuke back down, that's when you get the next leg up on things like equities and crypto. So we want this to get blown out and then crushed again, okay? So that's the volatility index. So this one is, again, showing us that we're likely going to get one more move to the downside, which we're actually saw a little bit this morning, which is what I was expecting in crypto, okay? So now let's go back to Bitcoin, and then we'll jump into ETH and then our precious fucking meme coins, okay? So here's another thing with Bitcoin. So people are also thinking, okay, how much lower are we going to come down on Bitcoin if we know that the S&P likely has a little bit further to draw down, okay? If the low's not already in. Well, some people are trying to call for things like, oh, we're coming down to 40-some thousand, you know, down in here, this demand level. Or we're going to come all the way back down to, you know, let's say, you know, 59,000, 52,000, come down, take out some of these lows. You know, just calling for these ridiculously low levels, which don't even make any sense from a market structure perspective, because there's other levels in between that would need to be lost. Look at this on a macro, okay? For anybody who's nervous about whether or not we get another leg up on Bitcoin. Does this look like... Does this look like to you a bear market happening? Okay. Does that look like a bear market to you? Does that look like we're coming back down into 40 some thousand, etc. territory? Even if you make this super tight, this channel. Look. Here's the low. Higher high, higher low, higher high, higher low, higher high, higher low. You're still in a bull market. You're going to get these mid-cycle corrections. It's going to happen. These are healthy. This is to shake out market participants. This is to make sure that liquidity gets concentrated again with the winning projects, the winning assets. This is not a bear market. This is not a break of market structure, right? Bitcoin is still fucking parabolic uptrend, right? So you can't look at this and get nervous and say, oh my goodness, it's fucking over. We're going into a bear market. Does that look like a bear market to you? Does that look like a break of market structure? Over here. Look. So let's call this your, let's do it like this. Okay. So here is the low. So we make the low right in here. This was last cycle. Okay. It's clear when you're going into a bear market because you're going to get the break of the market structure. Okay. So you see with this, right? You had your top in 2017. All right. This was last 2 cycles ago. You start breaking down and you come into a bear market, right? So here's your bear market low right here. All right, that's your low, $3,100. And then you start to do what? You break to the upside. You break this market structure. So you're in a downtrend. All of a sudden you start making higher lows, higher highs, higher lows, higher highs, and you break back down into a bull market. So you get this little pull back from COVID. So COVID is what it is, right? You're going to have COVID shakeout. You can't really, if it wasn't for COVID, you wouldn't have had this huge puke. Would have kind of just probably went like this, right? But COVID, you can't account for things like that. But you see how this is a clear bull market, a clear uptrend. And even in here, this was not a small correction right here on this double top last cycle. This was and I know you guys would lose your minds if this happened, but this was a 56% correction on Bitcoin before you inevitably literally set a new all-time high and went up fucking how much percent? Before you went up over a 2x. So even with a 50-some% correction, you draw down from this top in April of 21 on Bitcoin, you draw down 56%. You still had another pump all the way back up, another 2.4x, right? So now I'm not expecting that much of a pullback on Bitcoin. That wouldn't really make sense unless something on equities was really cooked. But you still maintain this higher market structure trend. So then you come back up here. This ended up being the top. Then you lose the mid range. This is where I'm looking to exit, like right in here. I'm getting out here. And then you draw back down. You see this come. And now once you lose this channel, look, clearly you're in a bear market. You're coming back down, right? So you broke. Once you break that major market structure, it's the nuke. Cascade, come all the way down, cascade. Set your new bottom, okay? But look, it's very clear we're still in this uptrend. So unless we start losing actual market structure and we start puking out of this, which you could even make it something like, no, it's too far. I would say something like, I could leave it like that. But if you come back down into this range right here, you're fine. Like you can come all the way back down to 73, 72, 71,000, maybe get a quick little deviation, and you just say, okay, this is a little bit larger than how we drew it. But this is really the lowest I see Bitcoin coming. Is this major level right here from the previous all-time high, 73,000.6. You come back down, you sweep that high. Now, here's the only thing though. If you sweep that high right here, you're probably sweeping this low at 66. Okay. So this is your liquidity. Okay. You're probably sweeping those two. Okay. But clearly you can come down and hit this and still stay within that channel, or at least you could move the channel out a little bit if you get a quick move back up. Okay. So higher time frame, we're fine. It's all good. We're cooking. All right. Let's see. Okay, any questions, gentlemen? We got double-digit live viewers. Of course we do. We're growing the team, growing the alpha. Clearly we know what the fuck we're doing, so people are paying attention. It's only a matter of time. All right. So there's our larger time frame on Bitcoin. Okay. Locally, we can take a look very quickly, very, very quickly. And then I want to move on to ETH, and then I want to show you some of these altcoins. Okay. All right. So on Bitcoin, right? So like I was saying, this level right here is going to be the lowest I see it coming on that last puke down, which again is confluent with our move down on ETH that we've been calling for. So we've been calling for that move down on ETH. Let's see. By the way, this channel right here, oops, we were drawing that because when you bull flag like that, typically you get a move back to the upside if you're not just cascading down. Okay. Let's get our price labels back up in here. Okay. Beautiful. Okay. So we got a lot of shit drawn out on here again. So here's where we're at locally. We got the February monthly open at 102,000. We got the yearly open and the quarterly open at 93.5. Our POC, our point of control, we could actually update this POC or this volume profile. Okay, yeah, it's still at 97. Yeah, like 97,000. Make that a little bit thicker so you guys can see it. Okay. So here are the significant levels locally. Okay, we had this liquidity here at 78.3. It's likely we get that and sweep it again, right? So that's what we're coming back down to do, is fill this wick. Typical, makes sense, right? So come back down. We're trying to fill this wick right here from this nuke on February 28th. So one of two things that are going to happen. Okay, so we want to just be ready for both of these. This 73.7 thousand was our previous all-time high support. So this is our next very significant level that we don't want to lose. What I'm expecting to happen, and what hopefully happens, is if we do break down and we sweep this low and get this liquidity again, we front run that 73 and start to do something like this and basically reverse trend. And so we want that, because if you sweep that previous all-time high support, like I said, you're coming down likely to get either this. Yeah, you're probably coming back down and getting that low. And if we come back down to 65K and we grab that low, then we're probably coming back down lower and it's cooked, right? So I'm looking for a front run on this. Basically, you break down, you come back down, get this liquidity, maybe start turning around like 76,000, right in this area right here, right? 75, 76,000, and start to reverse trend here, okay? I also have a ribbon on, an MA ribbon on, and I'm hoping that we're now below this red line here, showing that we're overextended, okay, to the downside. So as this starts to curl back down, it's going to want to pull back up and get above these ribbons again as well. Okay. So the downside is not muted. The downside is limited at this point. There's not a ton more downside to be had. So I'm not looking at this and saying, all right, I want to start exiting positions. That's how people get fucked, is they get bullish. They wait to get bullish until we're so clearly topping, super bullish, been going up for 2, 3, 4, 5x. Like, people get bullish at the top and then people get bearish at the bottom. It's classic market psychology. And those people get absolutely wrecked because they wait for the price to be very high and wait for price to start pumping before they buy. And then they buy the top. And then they ride that bitch all the way back down to the bottom. They get to this point right here, right on the final leg down, the final capitulation, right when the market's about to bottom. They're all pissed off. Their portfolio's down. Oh, I can't handle it anymore. And then they sell the bottom, and then price starts to go up again. This is classic market psychology. So what I'm trying to show you guys is you don't start selling here or down here, or even when we get this final move down. You don't sell there. That's not where you sell. That's where you buy. This is a fucking reversal, or this is a mid-cycle correction. So once we do start reversing, these are the levels I have marked out. So the range low is at 89,000. So you saw we had some interaction here with the yearly open when we had that news of that strategic Bitcoin reserve. We came back up to the yearly open, rejected immediately, back down out of the range, try to pop back into the range, rejected again. We need to see this yearly open get reclaimed. Then we need to see this 97.1 thousand get reclaimed. Why? This NPOC, this naked point of control, is where the most volume is taking place from buying and selling. So this is a huge supply level right here. Right? This is a huge supply level. That's why you see a lot of transacting going on in there. So if you click on this and we click on supply, we need to get back above this supply and get past this naked point of control. We get up above this naked point of control, now we're fucking cruising. Flip this monthly open, the February monthly open, then I'm bullish again, then I say we break out to new all-time highs. So those are the levels to be watching for on Bitcoin. So we got to start reclaiming this market structure. Okay, get back above the 2025 yearly open. Then we got to break through supply. Once we break through supply, we're looking good. You reclaim the monthly open on February, the 1025, then you're bullish. Then we say we move higher. Okay? So there's where we're at on Bitcoin locally. Another larger time frame point of confluence that I'm looking at, right? We've been talking about the GLI, the Global Liquidity Index. Okay? There's been a lot of talk about this. A lot of people think they, might know a thing or two about this. Well, let me just show you the candles on this. So GLI, where we're at with the GLI, pumping right now. So the Global Liquidity Index is also moving up. That, again, to me, is another point of confluence. We should start moving up higher in the coming weeks. Coming weeks or coming month or two. So GLI is moving up higher. We like that. That's more liquidity into financial markets. We'll take that. Then we got the other point of, what was the other one? Oh, the TGA, the Treasury General Account. That was the other one we want to look at real quick again as well. Okay, so the GLI is moving up. Let's look at TGA. Look, beautiful. We want to see this nuke. Let's put it on the weekly. Okay, so we want to see this Treasury General Account start to nuke, meaning that the U.S. government's spending money, stimulating the economy, right? You see it coming down now because they had to start using it because they didn't raise the debt ceiling. And then you see GLI moving up, right? GLI is moving up, moving to new all-time highs. TGA is moving down, more liquidity and getting injected into the markets. Again, we're trying to front run the move that will eventually come. This doesn't look like bear market incoming to me, okay? Take a look at this here too, right? This was COVID over here, right? COVID, they shoot it up, their Treasury General Account to 1.8 trillion. They nuke it to stimulate economy. What happens? Bull run in 2021, right? August 21, September, October. Look, October 21. And then in December, that's whenever you get that December 21. That's when you got that last move up in crypto. Cool. So we push this back up. We nuke it back down again. We nuke all the way down here. May, June 23. When did the crypto bull market start again? When things start heating up again? Q3, Q4, 2023. And then Q1, Q2, 2024. So same thing. Now we move back up again. If this starts to nuke again, which it looks like they're going to have to do, and this gets back down here, May, June, well, what are our assets going to do? Move up, right? So more points of confidence, more confidence that the cycle's not over. Beautiful. All right, now let's take a look at ETH. Good old ETH ski. Okay. Okay. So let's go to ETH right here. So look, this is what we've been talking about on ETH. Let's do, because I want to be able to show everything. Yeah, here we go. Okay. So ETH, we've been talking about this. Last 2 years, we've been in this large range from $4,100 all the way down to about $2,000 ETH. Okay. Finally, it looks like we're getting the last capitulation that we've been looking for down to 1750, which is this bear market demand range, demand zone. Okay. In here. Right. So we're finally getting this last move down on ETH, which is good. We want that final flush. Does it look good on the portfolio? No. But what does that mean? Generational entries. That means we get this pop back down to 1750, reaccumulate probably for a week or two, couple weeks, and then we start pumping back up hard. So you see us starting to finally lose this level right here, right? This is this wick down right here. So that low, yep, took it. We had that low, took it. So you see we're finally breaking down from this little demand region right here. We're losing the range. What's going to happen on a lower time frame? Yeah, so we closed the daily outside of the range. This is the first time yesterday where we actually had a daily candle close outside of this range that we had for the last couple years. Okay, that's a big deal because that was the lowest daily candle close we've had on ETH since back in 2023. Yeah, since back in 2023, right? Yeah. So for years now, that's the lowest it's ever closed. So because it closed outside of the range, that's a bearish confirmation. Okay, so we closed outside of the range. We're probably going to reject right here and then finally puke back down. Good. We want that. Okay, we've been saying that that's probably going to happen. Okay, so the timing of it makes sense as well, because the timing is what's the most important to me. Is when are we buying, when are we selling, right? Price will go up, price will go down. It's inevitable. There's nothing you can do to stop that. There's nothing you can do to change that. It's going to happen. The question is the timing, and are we timing our buys correctly to maximize our profits? So I had shown you guys a timeline that I was looking at. To show when this would happen. And it's lining up beautifully. So let's put on the RSI. Okay. Let's take a look at ETH on the daily. Okay. So when can we expect the low to get put in? So we still see another move down on equities, which would make sense with one more move down on ETH and Bitcoin. So it all is lining up. It all is making sense. When you look at the RSI, which is an oversold and overbought indicator, this is when we had our last capitulation on Ethereum, right? So this clear overselling of ETH. That was the capitulation. We come back up and then we make the next move higher. This was the first move down into oversold territory, which was that. So the reason that we've been expecting more downside on ETH if we didn't have a quick V recovery is because similar to this liquidation event on February 2nd, February 3rd, this move only brought us back down into here. Okay? Similar to this move right here. So people were thinking that, well, we could V recover and start pumping back up again, which would have been nice. We were watching for it. We're going to see if it was a quick reversal. But it didn't make sense because we never actually capitulated. When you get this deep red in the oversold, that's a sign of capitulation. That's a sign of people who are just like, fuck it, I'm selling. It's oversold. I'm still selling. It's clearly a bad time to sell. It's clearly oversold. I'm still selling. Capitulation, right? People gave up. We still haven't had that last capitulation on Ethereum this time on the RSI, right? So when we do inevitably come back down to 1750, right, and we see that one last puke down, confluent with equities, confluent with Bitcoin, we're going to get a move like this before we start to rally, and that's going to do what here? It's going to bring us into here and build this like oversold move, which will be this one right here. That's true capitulation. So again, we want capitulation. Why? Because yeah, in the moment, the price sucks. It hurts. Your bags are down. But the only way for you to get a pop back up to the upside, as Isaac Newton would say, for every action, there's an equal and opposite reaction. For you to become very oversold, well, the opposite would be overbought, and you get this pump back up to the upside, right? You get the reversal. So this one was the lower, then oversold. This one was the overbought, and then the lower right here, right? Same thing. So we want this oversold. We accumulate, we load up on our shit right here, and then we're selling up in, you know, I won't give you guys exact targets on YouTube. Obviously, that's why you got to be inside the Taylor's code for that shit. But, you know, you're selling up there once RSI gets like this, something like that, or something like this again, right? So up in here. So it's all making sense. We like it. Timing aspect. Okay, so we've been saying how the GLI is 2 years. I'm giving you guys fucking juice. Who does this? Who does shit like this? Okay. By the way, gentlemen, I'm going to do I'll give it a couple more minutes. We'll wait till we get a little bit more viewers before we do the TC. I'll show you guys the Taylor's code. So, timing perspective on this. So what was the time frame that took us to actually have a reversal? So we had the capitulation here. Here was the high. Capitulation here, or here's the high, sorry, and we come back down, fill the wick. Okay, it took us 19 days and then 13 days. So what are we doing over here? Low, high, 20 days, makes sense. Let's see where we're at here. 13, 14 days. So very similar, right? Timing wise as well. So what I'm expecting on ETH, because this took a little bit longer, but it was about the same as this to set the low and then that local high before inevitably coming back down and setting the second low. What I'm assuming is going to happen here is within the next couple of days, right? Whether it may already have happened, it's possible if we don't get the 1750, but I still think we do. But at least within the next couple of days, this low on 1750 should get set. That's what I'm expecting, okay? So I'm looking for that last flush down within the next week or two because the timing makes sense. The timing also makes sense with the GLI, which is about 2 months leading the market. So Bitcoin's about 2 months lagging GLI. Well, 20 days plus another couple of weeks would be about what? Month and a half would make sense for that to be the low, and then you start to get the reversal, right? So bottom's close, gentlemen. Bottom is very, very, very close. What's this one? The bottom is very close. Oh, shit. Okay. Here's the ribbon. That's clearly in oversold territory. I'll show you this as well. Anytime that we've been on a larger time frame and we've gotten below, where'd it go? Where the fuck did it go? Here's one other thing to look at on ETH too. Anytime we've gone below this red SMA line, this is the 200. We would spend a little time below it before we get a pop back up. Pop back up. Little time below it, pop all the way back up, right? Barely came below this red line again, right? Barely on this one and right here. Pop back up. Look how far down below the red SMA we are. All the way down here, okay? Now, this is on the weekly time frame. So like I said, it could take a couple of weeks for us to officially bottom out. But you take a couple of weeks, you spend a couple of weeks down below this red line. Eventually, right, every time you got that move back up, move back up, move back up, move back up. Guess what's going to happen this time if you're patient? That's what's going to happen this time if you're patient. Move back up. Okay. Beautiful. All right, gentlemen. Pepe. Let's look at Pepe in the boys club real quick, and then we're going to get out of here. So here's ETH. Let's turn off this ribbon right here. Let's add Pepe down below. Okay. So you guys can see clearly there's a correlation between the two. Obviously, we've talked about this. This is the whole reason that we hold Pepe, is because the correlation is strong between the two. So you see what's happening on ETH. You're getting this last capitulation on ETH. You're going to get the last capitulation on Pepe as well. So the question is well, where do we find the bottom on Pepe? Well, if you take a look on a higher time frame, let me actually switch them real quick. Let me put Pepe on. Yeah, Pepe's on top. Let me put this on a monthly time frame. You're actually right at your demand level on the monthly. So I would say something like that. So buy territory. This is buying territory on Pepe. Okay, why? Historically, clearly, this has been a fantastic buy on Pepe. Why? Look at the demand. So let me make sure I touch that right there. Yeah. Look at this. Every time the price of Pepe on the monthly, so you see how it was a supply before. So if you look at this candle, this was the top of this candle before we rejected. And this came back down to fill in this FVG, fair value gap. So it came back down, filled the FVG, and then we started pumping. Anytime you bought Pepe within this demand zone or on top of this demand zone, you made a shit ton of money. Why? Well, look, come back down, you feel the FVG. What's the next move? You go and you crack off for a 4x. Beautiful. So you just 4 times your money in 2 months. You come back down. You retest the demand again. Okay. Next move was up to where? Boom. You crack off for a 5x. You just made a shit ton of money again. Cool. You come back down. You retest the demand. What do you think's going to happen this time in the demand zone for Pepe? Once again, you front run the move. I'm literally showing you guys the fucking juice. Look, everybody's scared. Nobody likes Pepe. Guess what? Pepe was this price before and lower. Look, Pepe was down here, which is a lower price than where it's at right now. Pepe was over here, which is basically where it's at right this second, right? Well, every time, up. Up. What do you think is going to happen this time? Up. And each time it goes up higher, right? So it comes back down, goes up higher, comes back down, goes up higher, comes back down, goes up higher. Okay? This is premier entry on something like Pepe. We're on the monthly demand support level. That's a huge level. Monthly time frame, that's a massive level. So people never really look at things on this high of a time frame, but this makes sense. Like, it just came back and revisited this major demand zone, right? So anything in here, premier entry. So if you want to wait for that final capitulation on Ethereum to 1750 and start entering in, you can do that. I would personally, well, I won't tell you what I would do personally, because that's why you're inside the Taylor's Code if you're not already. But I have a plan with Pepe as well. So, but you're at this major demand zone. If you lose this demand, okay, it's probably over for Pepe. Now you got the break of the market structure. Otherwise, on a monthly time frame, this looks fantastic to me, and it's trading as it should. So look, ETH pumps, Pepe pumps. That's ETH beta. We want that to happen, right? ETH pulls back. What does Pepe do? Pulls back. ETH pumps right here. What does Pepe do? Pumps even harder because it's beta. ETH pulls back. So does Pepe. Eventually, ETH bottoms out and does this. What do you think Pepe's doing? Boom. Where do you want to buy? How could you maximize gains? Well, you would buy down in here. You would buy down in here. Pretty simple, right? Simple. Hard part is everybody gets in their feelings, and that's why financial markets always play out the way that they do, because you can't change human emotion. So, simply put, you're on the monthly support for Pepe. I'm seeing this pump back up, obviously, whenever ETH moves back up. And I still don't see a world in which Ethereum doesn't break its previous all-time high this cycle. ETH goes above $4,900. This is what Pepe is going to look like. Pepe is going to be up in here, even if ETH just does this. Comes up to like 5K, 6K. Pepe's pumping to new all-time highs. Okay, leveraged Ethereum. Easy money. All right, gentlemen. Questions, comments, concerns, any charts you guys want to see? Ben Bombaclot. Yeah, he understands. All right. Any charts you guys want to take a look at, gentlemen, before I do a show for the community? What's going on, Ben? All right. So, for those of you that don't already know, the Taylor's Code, we've moved completely over to the private Discord, which is huge. So, this has been a game changer in terms of the way that we do business, because the school community was nice. We had 380 people, 380 inside the school community. And it was great. It was great for building. It was great for networking. It was great for being able to post content, post charts and things like that. But it wasn't the best way to be able to say, it wasn't the best way to be able to make money, let's say. Okay. Now inside of the private Discord, we have bots that we're able to trade with. We have charting bots that you're able to use. We have the individuals inside of there that are able to talk to each other, connect, communicate, network, develop themselves inside of the community. So we went over to the private Discord, and I'm actually going to show you the website to be able to join. So the link is in the description for the YouTube. It's also in my X account for the Taylor's Code. It's in the bio. It's also in the description for the channel profile as well. And on Kick, on Twitch, wherever you're watching me from, it should be in those channel bios as well. So you go to the Taylor's Code website, and we're running a promo just for the first month. Okay, so for March, this is the only month that you're going to be able to do this. There it is, taylorscode.com. This is the only month you can do this. This discount code will expire March 31st at 11:59 p.m. for those of you who like to procrastinate. You're going to get $40 off the first month of the Taylor's Code. So if you want to join and just be a part of the premium Discord, get access to myself, Logan, Bobby, and the rest of the gentlemen that we network and do business with, join as a professional. If you want access to the private Discord, the private crypto plays, which is where I personally show you where I'm buying, selling, accumulating assets, what we're doing before I even talk about it on YouTube, being able to get it in part of the plays that are going to be happening in real time as this market starts to correct, which ideally actually would be the time you want to be joining, because as soon as things start to bottom out, we're back in the game, baby. We're accumulating. We're buying new things. We're back in the game. And so that's whenever you want to be seeing, okay, market's turning around. What's pre-almo buying? What are the guys buying? What are they accumulating? How much are they accumulating? When are they accumulating? That's how you're going to be able to make the most amount of money, right? Yeah, exactly. So if you don't see $99, which your first month would only be $51, what is it? $50. I'm sorry, $60. Your first month would only be $60 to get the private crypto plays. If you have a portfolio of even $500, of $1,000, you don't think it's smart to join for $60 and be able to make an extra $1,000, $10,000, $50,000, $100,000, $1 million, depending on the size of your portfolio? You don't see that being valuable. You don't see having that information as a edge in the market, being able to deal with people like myself who obviously understand what the hell's going on, and on a large enough time frame can give you guidance on when you should be taking profits, how you should be taking profits, when you should be accumulating, when you should be buying, what assets to be buying. You're going to make way more money on a long enough time frame by just becoming a part of the network, as opposed to you just spending that money at fucking Chick-fil-A or McDonald's, like where you would spend it regardless, right? You're going to spend your money anyways. You may as well do it in a way where it's going to generate you more money. Because if you really want to buy your McDonald's, well, join for $60 a month, make an extra $10,000 a cycle, $100,000 a cycle, and go buy more McDonald's. That's how you invest, okay? So click join the network. If you want to be a part of the private crypto plays, you get to the Stripe checkout, and then you make sure you enter the code. The promo code is TC444, okay? TC444. Hit apply. It'll give you $40 off for the first month. And that can work on any 3 of the levels. It'll come up. TC444. Come on. Load, baby. It's not true. It works. I assure you it works. You just got to hit it twice. There it is. $40 off for your first month. All right, gentlemen. Get you inside the Discord. We'll get you your portal. We'll get you your link as soon as you guys join. And we'll start making money. All right. Back to the regularly scheduled programming. So there's your monthly level on Pepe. Do you guys got anything in the stream that you guys want to talk about? Any charts you guys want to look at? We can look at XRP, because XRP is going to be a big player moving forward as well, because they're deeply connected with Trump, and they're a U.S.-based crypto company, and Trump wants to help U.S.-based crypto thrive. So we may as well look at XRP. So here's XRP. I'm seeing us coming back down to this range low. Okay, that's what I'm seeing on XRP. Yep. So XRP, you're either going to get a puke down from, what is this, $2 down to, that's not that much actually. You might come back down lower on XRP. So XRP is going to be a great hold for those of you who have large, let's call it amounts of capital, so that you want to preserve your capital in a way, and also you're not able to size in effectively to these smaller assets like Andy and Wolf. You know, if you got $1 million you want to size in with, yeah, you're not going to really want to go right into, $1 million of Wolf, because you're going to end up pumping the price on yourself. So if you got large bags, I personally also hold XRP. I would recommend grabbing some, because Trump's going to help pump this. So locally, we're in this range on XRP, and XRP is one of the altcoins that has by far held up the best, which is very promising. So every other altcoin looks like this. This is every other altcoin. Is down here at this demand level, right? That's every other altcoin. Thoughts on Cash, Binance sniffing around the corner, Wallet 5 accumulating so much supply, retesting support, about to release 10 blocks per second. I think April is up time for this L1. So I'll take a look at that here in a second. So XRP has been holding up fantastically against other altcoins. So I'm expecting, if we get another puke on equities like we're expecting, and on ETH and Bitcoin, etc., this is my level for what's it called? XRP. Okay, this is the next demand level for me. So this is back down at $1.50, right? So drawdown, that would be from here So maximum another like 25%. Okay. Because if we lose this range low, we're coming back down for this demand. This is an FVG right here, fair value gap. This is going to get filled. So your FVG is right here. So that's your FVG. At the very least, you're getting this for sure. That's your FVG. Okay, so this is a gap between this wick. You could actually say this wick. Yeah, so that would be your FVG, right? And so best case scenario, you're only coming down maybe like another, now to fill it would be 22%, but I'm expecting a bounce probably like around 26% downside. Okay. So this is where, if you get this move back down into here on XRP, this is a fantastic bid spot. Okay. Because you come in, you fill the FVG, you retest this demand level. Okay. After that breakout of the range, and then you're going to do something like this. Going to come back down, probably pop back up for a second, come back down into here, fill this, maybe do something like that. Boom. And then you're moving back up, right? That's what I'm expecting on XRP. So look for this FVG to get filled at 162, 160. And then the actual demand zone would be starting at around $1.50 to about $1.30 would be your area. $1.50 to $1.30. I would not see it coming back all the way down to retest this high, but it's possible. I wouldn't expect it though. Yeah, well, I don't think we're coming back down that low. 126, no, it's too strong right now. Okay, so that's XRP. Look for this FVG. Look for the top of this demand to get retested. That's your bid spot on XRP, right? Something like that. And then Kaspa. Personally, Kaspa, I'm not a huge fan of it anymore. But look how much further down this is broken down compared to XRP. Basically, it's done what XRP had might do, except much worse, in the sense much lower it's come. So you're not safe on Kaspa. Not necessarily safe, but you're coming down to at least here on Kaspa. Yeah. I mean, that would be your big demand zone. This would probably be, yeah. This would be your demand. Okay. So you're definitely coming back down lower on Kaspa, but it's just so much, it's just broken down so much further. This is basically what we were looking at on XRP, was around here. And it coming back down and just pumping back up. This already broke down past that, and it's coming down further. It's coming back all the way to, this was in April, yeah, 2023 levels. That's not good. So, I mean, we'll see. It's just, I don't know. I mean, I do know. I mean, it's definitely coming back down to this demand zone, but if it comes back down, you can't lose any of this. If you lose these highs on Kaspa, it's decimated. It's over. It's going back to zero. What am I looking for? What tool? This would have to be coming back down another 15% before we start tagging these highs. And it's not going to just stop at this first high. I mean, it's probably going to come back down into here. So you got another, I mean, that's a lot. That's actually a lot more than what it looks like. So another 30% down on Kaspa before you start hitting these support levels right here, this high and then these lows. So you're definitely drawing down at least another 20 to 30% on Kaspa. And then you would have to, it has to hold in here. It has to come back down and it has to start reaccumulating before moving back up. If you lose these lows and this high, so this level right here at 4 cents, right? 44.042 cents, you're cooked. So It would be the generational bid spot for sure, but I'm not bidding it until I see it come back down into this demand and start to reaccumulate and come back up out of it. That would be my play. The only other issue with Caspa is it's definitely lost its hype that it had in 23 and 24 because it was looked at as a competitor to Bitcoin, basically doing the same thing with a little bit better technology and faster, cheaper. The only issue now I see with that is that Bitcoin has become adopted. That was before Bitcoin was a reserve asset for the U.S. government. That was before there was the Bitcoin ETF, et cetera, et cetera. Bitcoin has now been adopted to the point where it's going to become the world reserve asset over a long enough time frame. And the mere fact that they're going to use it as a reserve asset now takes away any negativity that you could have towards Bitcoin because you're not going to need it to transact. You're not going to need it to be fast. You're not going to need it to have, et cetera, these things that Caspa has because it's a reserve asset. The reason gold still works as a reserve asset and people still own gold, even though you can't, like, it's fucking a gold bar. What are you going to do with a gold bar? It's because it's reserve. It's called reserve to flow ratio, right? No, stock to flow. It's called stock to flow. The stock to flow on gold is so good because you can stock it without having to flow it out. So something like oil, the stock to flow is not good, or it's not great. So you could store value in oil, but you're going to use a lot of oil and you're going to sell a lot of oil. So it's not the best store of value. Gold is a fantastic store of value because it's a high stock to flow. You stock it and it doesn't flow out a lot. Bitcoin is now going to become the same thing. When you use something as a reserve asset or to preserve wealth, the idea is that you're not going to move it. You're not going to sell it. You don't need it to use it for payments and transactions and all this other bullshit. So now the idea with Bitcoin being very slow transaction time, which it is a very slow transaction time, it doesn't matter. It just doesn't matter because you're not going to use it to make payments. You don't use... The idea of Bitcoin in the beginning was to use as a payment method and for it to be anonymous, but it doesn't make sense for that anymore. It's too slow, too expensive, right? So when you change the mindset and use it as a reserve asset, it no longer needs to be fast. It no longer has to have good transaction times. It no longer has to be low fees. It doesn't matter. It's you just hold it, so it doesn't have to be fast. So Bitcoin's just going to be clearly the all-time winner. The Caspa is not going to replace Bitcoin. So a lot of that sexiness to it definitely is gone because it's essentially just the same thing as Bitcoin, but a little bit better. Better in terms of technology, but the technology doesn't matter is my point. It doesn't matter at this point. But yeah, this chart does not look... this is generational bid, but this thing's definitely pretty cooked. If it comes back down below here, you're done. It's over. Okay. All right. Outside of that, gentlemen, we had a fucking fantastic stream. Tons of alpha, a lot of higher time frame juice. And that's what we do. We keep the people inside the organization educated. Let's continue to make money, boys. Let's continue to fucking grow the deal. This will be the largest network across the face of the planet within 2 to 3 years, guaranteed. Okay, I'm telling you right now. If I would have been live on X today, we would have had 100 live viewers. But of course, whatever the fuck happened. Who the fuck are these goofies? All right, let's do... let's do a live scene and do a little Mr. Producer. All right, gentlemen. We'll see you inside the network. All right? Like I said, thetaylorscode.com. Join up. We'll get you fucking situated. We'll get you boys making money. If you guys need help setting up wallets, setting up centralized exchanges, decentralized exchanges, using liquidity pools, making money on-chain, any of the things that you guys aren't aware of how to do or you need help doing, let me know. I'll get you situated with that as well, and I'll help you make money in those aspects. Okay? Like, comment, subscribe, push it out into the fucking algorithm, gentlemen. I mean, you want your sons watching James Charles makeup tutorials, or you want your sons watching a hero teach about crypto and making money in financial markets. Choice is up to you. Put it out into the algorithm. You guys are the ones who decide what people see. All right. Ben, appreciate you. Legend, thanks for the input. Interesting to see your thoughts. I'm Caspa Max. I do believe in it long term. Yeah, hell yeah. That's the thing. If you believe in it, bro, still at the same, have your convictions, right? You probably know more about Caspa than I do because I don't watch it every single day. So if you're convicted, fucking hold that shit. At least you know the demand zone that I think it's coming down to. And if you believe in it long term, then that's your fucking bid spot. That's where you fucking bid. All right. So yeah, we'll see you inside. All right, gentlemen. Little Mr. Producer. Got all them hoes.